3 whales just dropped over $11 million on Pump token in a single day. Not a million, not 5 million, $11 million. And they're not done yet. The biggest one now holds over $16 million worth of this thing. So either these whales know something we don't, or they're about to learn a very expensive lesson. Either way, you're going to want to stick around for this one because the charts are telling a story that could make or break your portfolio. Welcome back to the channel. If you're new here, hit that subscribe button and smash the like. It actually helps more than you think, and it keeps me making these videos instead of, getting a real job. Pump is the native token of Pump.fun, which is basically a meme coin launchpad. Think of it as the Shark Tank for degenerates, and right now it's rallying hard, breaking above 5 cents on Tuesday. That might not sound like much, but in crypto, 5 cents today could be 50 cents tomorrow, or zero. It's a wild ride, folks. According to Spot On Chain, a blockchain analytics firm that tracks wallet movements like the FBI tracks suspicious bank transfers, 3 different whales accumulated 2.23 billion Pump tokens. That's $11 million of buying pressure in one day. Not spread out over a week, not DCAing like a responsible adult, just boom, 11 million, see you later. The first whale pulled 1.29 billion Pump off OKX, worth about $6.4 million, pushing their total holdings to 3.31 billion tokens. That's $16.4 million sitting in one wallet. The second whale grabbed 468 million Pump from Binance for $2.33 million. And the third scooped up 466 million Pump from Bybit for $2.32 million. These aren't retail traders buying the dip with their lunch money. These are institutional level moves. Now here's where it gets interesting. Platform revenue for Pump.fun is surging. We're talking about $1.01 million in daily revenue right now, up from just $545,000 on October 12th. That's almost double in less than 3 weeks. And this revenue comes from trading fees and token launches, which means people are actually using the platform, not just holding bags and hoping, actually using it. But there's more. Pump.fun runs a token buyback program using that revenue. Every dollar they make goes toward buying back Pump tokens and reducing circulating supply. Economics 101, less supply plus same demand equals higher prices. It's not rocket science, but it's effective. The question is whether demand will hold or if we're all just watching whales set up the mother of all exit liquidity traps. CoinGlass data shows futures open interest sitting at $431 million right now, up from $267 million on October 11th. For context, Pump hit its all-time high of $0.0089 on September 14th, and open interest peaked at $1.23 billion just 2 days later. So we're nowhere near that level of froth yet, which could mean there's room to run, or it could mean everyone learned their lesson last time and this rally dies faster than your New Year's resolutions. Let's talk technicals, because the charts don't lie. They just sometimes speak in riddles. Pump is trading above 5 cents right now, which is our first key support level. The MACD indicator on the 4-hour chart has been flashing a buy signal since Friday. For those who don't speak technical analysis, MACD is basically momentum on steroids. When it flips bullish, it means buyers are overpowering sellers, and right now, buyers are flexing. The next major resistance sits at $0.0066, which was tested in early October. Break through that, and we're looking at a clean path toward the descending trend line that's been haunting Pump since mid-September, when it hit that all-time high of $0.0089. If bulls can reclaim that level, we're talking about a potential 75% move from current prices. Not financial advice, but also, maybe financial advice. The relative strength index is sitting at 72, which is firmly in overbought territory. Now, a well-known trading principle warns that overbought conditions often precede sharp pullbacks. Profit-taking is real, folks. Whales didn't get rich by being charitable, so while the momentum looks strong, don't be shocked if we see a sudden rug pull attempt around these levels. Support zones are critical here. The 200-period EMA at $0.0046 and the 100-period EMA at $0.0043 are your safety nets. If Pump closes below 5 cents, those EMAs will likely absorb the selling pressure, but if those fail, well, let's just say you might want to have your stop losses ready. Here's my take. Whale accumulation is always a bullish signal, but it's not bulletproof. These guys could be positioning for a short-term pump before dumping on retail, or they could genuinely believe Pump has long-term potential given the platform's revenue growth and buyback program. The fact that platform usage is increasing, not just price speculation, gives me more confidence this isn't pure vapor. The technical setup is solid, MACD buy signal, RSI showing strength, and key support levels holding, but that RSI at 72 makes me nervous. We're one bad news cycle away from a correction. My advice, if you're already in, consider taking partial profits at resistance levels. If you're thinking of entering, wait for a pullback to the 0.0046 or 0.0043 zones. Patience pays in crypto more than FOMO ever will. Alright folks, that's the breakdown on Pump token. Whales are buying, technicals are bullish, but overbought conditions could trigger a pullback any moment. Stay sharp, manage your risk, and don't bet the rent money on meme coin launchpads, no matter how good the chart looks. If you enjoyed this breakdown, check out my other videos on crypto market cycles and technical analysis strategies. And as always, drop a comment below. What do you think? Are these whales geniuses or about to get wrecked? Let me know, hit that like button, subscribe if you haven't already, and I'll see you in the next one. Quick reminder, cryptocurrency is volatile and risky. Nothing I say here is financial advice, just analysis and opinions. Do your own research, never invest more than you can afford to lose, and always use proper risk management. Stay safe out there.